Very good morning, friends, traders. I'm Nalnakshi Swami, welcoming back to my channel Smart Index Edge. I'm analyzing the Nifty for Monday's trade tomorrow. So, before analyzing, let me show you the pattern what has happened. You need to see the pattern. If you understand the pattern, then you can plan your trade very wisely. Here, I'm going back little bit back and I have marked everything. See, this was on Thursday. It closed at the bottom. You can see closing at the bottom. I've already marked. And the Friday, again it closed at the bottom. So it indicated that bears were dominant over here and the put option call option was plummeted to very cheap level. And then I'm using GAN high low indicator for for this. And on this day, that is on Monday, last Monday, that is 1st September, the market started rallying and the call option went to the premium. That is 2nd September. You can see the thing is it had closed at the top, closing at the top. And again, what did it do? After the trendy move, the trend continued, but closing at the bottom. You can see it as the closing at the bottom. That is on Tuesday. No. This is on Monday. Yeah, let me keep it. Yes, it is Tuesday. Last expiry. Tuesday expiry. Now, the market started moving higher, consolidated, closing at the bottom, and the next day, 3rd, it started moving higher and closing at the top. This is the one, closing at the top. This is closing at the low. So from the low, it started closing at the top. Next day for the GST news, market was a huge gap up. And what did it do? It closing at the low. It has closed at the low. This was on Thursday. And the Friday's close, what did it do? The market came down, gap up within this range and could not go above this, and then plummeted to the bottom with all fake news. Nowadays, AI generated news are circulating in the market. You need to be very careful actually. And the traders, most of the traders, retailers, they act and react for the news. Nowadays, fake news are circulating in the market. So, but you start believing on the chart. Chart will tell you everything. Don't trade on the news. Sometimes news will be will be triggered, but trigger to false direction also, to make the traders to sit in wrong direction. So see the chart and trade accordingly. And the price action will tell you the proper direction. Why you want to make assumptions and listen to the news? Sometimes news will help, but sometimes news will be harmful also. We cannot judge the news whether it is beneficial or harmful. That is the problem. But for that you should know the price action, what the chart is saying. Chart will tell you everything. Chart will whisper everything. Here, what happened on Friday is, for the first time I'm seeing this. If I go back, either it closed at the bottom or closed at the top. Here on Friday, last Friday, it has closed in the middle. That means the sellers plummeted the price to this level, and the buyers from this area, they pushed it higher and they have closed in the middle. That is an indecision close. So what should be your strategy for the Monday is, the range is here. Previous day range is here. Sellers have dominated from here. Any up move, little bit above, there is a liquidity. That is 24,000. If the market goes above 24,836, the market gets liquidity and it may be a sell on rise. Because here the big seller is sitting over here. He has pushed the market down even though pop-up was not sustained, and then it continued for the selling. So if it is the big player selling, then what should be our strategy for Monday? Then any rise above this level or to this boundary, 24,801 to 833, you need to closely watch that level. That may trigger sell and rise if it fails, or if it straight away starts moving down. If the market, let me pick up this tool. If it starts moving down, it can go down below this level. Why? The reason for this is, here the congestion is there. When there is a congestion, static stop loss orders are present over here. That is, liquidity pool is there for the big players to grab that liquidity. So market can, if it starts moving and breaking below this level, it can trigger the move below this level, and it can go past this level anywhere between 24,533 to 24,600 is the range for Monday. Or market usually does what is, initially it can make you directionless. It can go up. If it goes to 24,803 and starts failing and starts breaking below this middle point, this is very, very important. 24,740 is the balance line for the Monday. If it starts falling below the 24,740 in the first hour, you need to be ready for the breakout of this boundary. The sellers will dominate here and push the market down beneath this. So market can come down to this level. Here it has come down and it has congested here, and there is stop loss. You can see the stop loss over here. Beneath this, there is a liquidity pool. So you can anticipate the move to 24,553 in the market, and if it starts moving higher, instead of that, the bulls take control of the market, it can go up to 24,880. So there is liquidity here, space. You can see the space over here. You can see the space here. Above this level, let me draw a zone over here. Let me color it with a little bit pink. And this is the seller zone and this is the buyer zone. So we need to watch. Market has pushed the market down 2 days and it has closed higher. And if I go back here, you can see the market closing at the middle. Why did it do? It was after the drop, it was pushing higher and it closed in the middle. Same thing, after the drop, it has closed in the middle. The market can seek this level. Market is not ready to move higher in this month. It is, what it is doing is, it is, what can I say? It is spending its time on an horizontal way. Price is going sideways and it is spending its time between the 24,880 to 24,500. The market is spending its time. So meanwhile, we need to see if the bottom is held 24,440 to 370 is held, the market may gather momentum and move towards high. For the present week, present day, tomorrow, Monday, if it gathers liquidity from this area, that is a buying opportunity. It can gather momentum to cross this level to reach the 25,111. Before this to happen, the market needs energy. Market needs energy. The way the selling is coming, it means it is becoming, premium level, the market, no buyers are coming into the play. So markets needs discount. Any down move like this is an closing in the middle is an indication of tug of war between the buyers and the sellers. Sellers pushed the market and buyers from this area pushed it to the middle. They cannot push the market and close above this level. That has not happened on the Friday. Always market does like that. Suppose what you need to do is for an option, as an option trader, you will get a trade if you are very, very careful. So you considering this 24,800 as our hurdle and 24,600 as the buying zone and the selling zone, you can go for 24,800 put option and 24,600 call option in your radar. Okay, suppose the market gaps up. The gaps up in this direction, 24,600 call option will go to premium level and the put option will be discounted here. 24,800 put option will go into discount and the discount is an opportunity for a buyer. You should not buy at the premium price. Anything you should not buy at the premium price. Let me go to the option chart, Nifty 50 index, and let us check the 24,800 put option. In case if the market gaps up, the probable price, it has closed around 96, it can come around to 47 to 64. This is the discounted price you will get in the market for the put option. If it starts sustaining this And if it starts reversing, market rejects the level, higher level, then it will climb up and regain and it may start moving higher. Whereas if you go for the 24,600 call option, it has moved from yesterday, it had fallen from 274, plummeted to 126, and it is at the premium price. It gone up to the premium price 246 and closed near the 196. So it is not a buying opportunity. As an option buyer, you cannot buy this. So you can keep both the things in your radar and you just wait for the signal on the Nifty chart, whether it is getting rejected from the levels or continuation. If the market is continuing towards the upside, then it will cross this premium 274 and it can go up to 299 to 300. So there itself you just mark these levels. You will come to know. Since the market has closed in the middle, sellers have dominated in the market, probably the market can initially spike up and go down because they may sell. The writers will be active on the call writers. They may become active and sell at the premium price, and this call option may become cheap. And the put option, which is 24,800 put option, where we are trading, when it spikes up, it becomes cheap, and you get an opportunity to enter into the put option. So the boundaries in the Nifty, on the Nifty, 1 minute, let me go to the 50 index close. This is the trade. The range is here 24,826 to 24,632. So what you need to do on Monday is you need to wait for the at least 1 hour to market to show you direction. Even on yesterday, on the Friday, you can see the market took time. This is on the 15-minute chart, 35, 45 minutes, almost hour to make decision. And you because it was a gap up or confusing. So make a decision and then it was plummeted and a fake news was generated in the media, circulated in the media and pushed the market down. Again, they came to the buy zone. You can see this was the breakout zone and market took support over here. 24,617 and closed in the middle. That means both buyers and sellers are in tug of war and you need to be careful. And it is within the area, anything can happen. If it is a dip, then it is a buying opportunity. If it is a dip within this area, even the market, it can break down or it can trade within this range. There is probability. You should be ready for that. The market can go down and it can trade like this, forming an inside day also. Forming an inside day and the market can, writers market, it can become a writers market, put writers and call writers market. And then inside day, it can either trigger volatility to the outside or to the upside. So play can be either going below or popping up, or it can stay as a inside day. So if it is an inside day, as an option buyer, you will not have a very high chance to trade properly. So market will be very choppy, better not to trade. Better not to trade in within 1 hour, you will come to know because how the market will behave. But initially, if the market takes support, comes down, it can go up to this. So there is 24,675 to if it comes down and moves up. There is 148 range is there. Range is wide. You can play for the boundaries. Boundary from 24,670 to 24,826, you can play the game, call option or the put option. You can do that. So, friends, you have to trade wisely. I've mentioned, I've shown you what has happened in the market. You must have all these things in the market, and the VIX reading is 10.78 based on the India VIX daily high to be our range for Monday is 24,880 to 24,601. Only in case if the market is in hurry to break below this, then the range will expand. The market can test 24,553 if it is in hurry to move higher, weekly high. I don't think. Weekly controlling level is around 24,963 and weekly controlling low is around 24,519. Probably market can expire within this range. The market can expire within this range. You need to play it very carefully. It was an opportunity for you people on Thursday and Friday, but on Monday you need to be careful. Either it may be a play within the range. You need to be careful and identify the range and play accordingly. Suppose if the market is showing inside day, then you need to be careful. Thank you very much, friends. Nalinakshi Swami signing off.